Hi, everybody. It's me again, Alan from ABTS Training Services in London, England. And I'm with you here again on a very, very cold, damp, miserable day in London. I was reading an article in a trade paper a few days ago, a rather alarming and sad article. And it was talking about a Zimline vessel, Zimline being the Israeli shipping line, a Zimline vessel in distress off the coast of British Columbia in America, in Canada, I should say. Excuse me, Canadians. And there was 40 containers pitched into the water, and from memory, four containers on fire. And they were hazardous cargo, those four containers. I forget what class of cargo. Class 4 rings a bell, but that's neither here nor there. And it got me thinking when I looked at these photographs of the containers floating in the water and the fire bellowing out of these containers. And I thought, hey, I wonder, have the shippers insured their cargo? And the second thing that crossed my mind is, I hope to goodness they have adequate insurance. Difference between insuring and having adequate insurance. So it was that horrible, horrific story about Zim lines that got me thinking. And I thought, well, maybe I'll just do a quick video on this for the 12 followers I have. I'll do a quick video on this and go through marine insurance for you. So, and then related to that cargo, in other words. So we're going to look at marine insurance. Now, I did many, many moons ago, I did a YouTube on pure marine insurance. So this might be coming back over a little bit of it, which I apologize for. So there's no such thing as marine insurance per se. If you say to your freight forwarder, please insure my cargo, it's gobbledygook. It's rubbish. It's just like insuring your car here in England, and it's the same worldwide. You have different types of cover. You have fully comprehensive cover. You have limited mileage cover. You've third-party fire and theft cover. And two things are reflected in the different types of cover: how much you pay in your premium and what you get covered for. Fully comp is the best. Limited mileage is, yeah, it's okay. You might have, you're doing 5,000 miles a year in your old car. Or fully comprehensive. You're insured for everything. Now, it's the same with marine insurance, and as a matter of interest, it's the same for air insurance. There ain't no such thing as marine insurance. You've got to be more specific. Now, if I'm going to insure my cargo with a freight forwarder, I would call that freight forwarder, and I would say, could you please quote me, for a start, for marine insurance? And then I would tell him or them the type of insurance I need. And to be very brief, I would say to them, please quote me for clause A. Or please quote me for clause B. Or please quote me for clause C. So you can see there's different levels of insurance cover for sea freight. Now we're talking about these containers on the Zim line. Keep that in the back of your mind. So the first thing that struck me, as I say, was, oh, I wonder did everybody, there was only about 4,250 containers on that vessel. It was a small vessel. But I asked myself, I wonder, is everybody insured for that? Did they insure the cargo? And the second question was, did they do clause A, clause B, clause C? Because it's such a common mistake shippers make when they say to their freight forwarder, please quote me or please insure me for marine insurance. And they don't go into great detail. Clause A, Clause B, Clause C. Okay. So looking at Clause A, and please keep in mind that unfortunate vessel limping off the British Columbian coast in Canada. Think about that poor vessel, and you have a couple of containers on there, and you're thinking, am I insured? So if you've Clause A, you can more or less say, yes, I am insured, because Clause A, without going into the nitty-gritty of it, which we do, by the way, on our import and export course, but without going into the nitty-gritty, I'm going to make a blanket statement. You're covered for all risks. All risks. And for old timers like me, we never call it Clause A, we call it all risks insurance. Now have all risks, please. And if you're a young person at the other end of the phone or my email, you'd say, what? You mean Clause A? Okay, so all risks. Like all good things in life, there's always exemptions. And with insurance, as you know, there's exemptions. So in Clause A, if I had a container on board that vessel, under Clause A, I would be insured for all risks, except, and then there's a page and a half of exceptions, what you're not covered for. And here again, I'm not going to go into great detail of it because we do it on the import-export course. So if I was on that Zimline vessel and one of my containers was affected by either falling overboard or going on fire, and I had Clause A, I'd be insured. Now, let's pause here for a moment and let's talk about our old friend Incoterms 2020. And you might ask, what the heck has Incoterms 2020 got to do with Alan talking about marine insurance? It has plenty to do with it. There are two terms in Incoterms where the seller is asking the buyer to insure the cargo for them. Under CIP, cost insurance and freight to place of destination, and CIF, cost insurance to port of destination. CIF and CIP. That I in the middle is insurance. Now, under CIP, you're laughing because you have Clause A. But if you're shipping CIP, the seller is obliged only to give you Clause C. Now, if you had a container on the Zimline vessel that went overboard under a CIP contract on minimum insurance, Clause C, minimum insurance, you would not be covered. You wouldn't be covered because under CIP, and I'm just referring to my notes here from the import-export course, you are insured only for jettison overboard, not washing overboard. So you could have paid a premium, a very high premium. And you hear the news from the shipping line via your freight forwarder that a Zimline vessel has caught fire and 104 vessel, 109 containers fell over the side of the vessel. But you're not insured. Although you paid for insurance, you're not insured. I shouldn't laugh because it's not a laughing matter. So you can see, using the Zim vessel as an example, you might be, if you ask for insurance, you might be insured. If you sent that by, as I say, CIP, you're laughing. Clause A, CIF, the seller's obliged only to give you, I don't want to be too derogatory, but let's call a spade, rubbish insurance, which would be Clause C, rubbish for this particular consignment under Clause C. So you wouldn't be insured. So I'm trying to drive home to you that, and using the Zim line as a practical example, I'm sure there are lots of happy faces and sad faces of shippers on board that unfortunate vessel because they were insured, but they had the wrong insurance. So the golden rule is, if you want to insure your cargo, make sure you ask the relevant person, either an insurance broker or your freight forwarder, what am I getting? What am I getting for this? Clause A, clause B, clause C. Because although most, in fairness to freight forwarders, although most freight forwarders will tell you the insurance you're getting, not all do. Unfortunately, not all do, because they might think you know everything about insurance. So they might have a policy for clause C, without going on too much about that. Make sure you know what you're covered for. There ain't no such thing as insurance, full stop. You have to go into the nitty-gritty of it. Okay, now lots of people, what they call self-insure. I think, on a personal note, it's a very stupid word, self-insure. There's no such thing as self-insure. What it means is you don't insure. You don't insure. And you take a gamble. And you say, well, okay, if one of my containers is on that Zimline vessel and it fell over the side, I'm going to sue the socks off Zim shipping lines and get my money back. Not really. Because if you read very, very carefully the contract of carriage, I'll synopsize it. It says limited liability. So you ain't going to get the value of your cargo for a start, okay? So then you might say, well, I'll get some money back from Zim lines or whatever line it is, or I just ask for a repeat order and take the loss and just say to the supplier, there's loss at sea, hasn't insured it, I want a repeat order. And you play the numbers game, don't you? You're number crunching. You're thinking, well, how many times a year am I going to lose a container? So I can take a hit on one container lost at sea. Number crunching. That's called self-insuring. You don't insure, okay? But there is one very, very important part of marine insurance and of a voyage you should be very aware of. With due respect, not many shippers are aware of it, and those who are aware of it don't really understand it. And that is called general average. Okay, let me explain in my way what general average is. In clause A, clause B, and clause C, you're covered for general average. What the heck is general average? Okay, I'll tell you what it is, but I'm going to use my own made up example of general average. Six of us, we're on a vessel, and the vessel sinks. But we're very, very fortunate we get to the lifeboat in time. So down the lifeboat comes, and there we are, and we're rowing away there for about 4 days. The radio is broken. It's really, really bad. I won't go on. I don't want you all in tears or anything. So there we are, floating around. And we're running low on water. And there's 6 of us there. And there's enough water for 5 people to last another 2 weeks. So I turn around and I say, hey, guys, as the oldest guy, I've led my life. I volunteered to slip over the side of the vessel and peacefully drowned myself. So you guys can have my share of water. But, it's always a but I have a family back home. So will you promise me when you're saved that you'll all chip in, all 5 of you will chip in and give my wife and children a lump sum for the sacrifice I made to save you? Okay? Now let's just put it into a nautical situation. If a vessel is in distress and they have to eject containers from over the side. Now, this is not the Zim line. They didn't eject the containers over the side. They were washed over the side. 2 different situations. But if you have to jettison, like a pilot would jettison when his aircraft has been hit, if you have to jettison a cargo overboard to save the rest of the cargo in question could be on fire, like it was on the Zim lines. Now, it's going to spread to other containers. So what they do is, if they can, they kick it over the side. Now, in kicking it over the side, it's the same as me slipping over the side of the vessel and drowning. You owe me one. The rest of the owners, shippers of the containers have to chip in and make good the loss to that owner of that container who went over the side. Okay? And general average is working out how much every owner has to pay. And they work it out by saying, well, how much was in the container? What was the value? £80,000. Okay. And there's 2,800 people that were saved. So it's £80,000 divided by 200 people. It works out roughly that way. Not exactly. Okay. So now where does this rigmarole I was telling you about, me drowning at sea, etc., where does this fit in to marine insurance? Because if you're insured under Clause A, B, and C, you have general average. So if you've got to pay up compensation, you're covered. But if you do not insure, self-insurance, if you do not insure, and a general average claim is made, not only you could be in it for a lot of money, a lot of money, depending on how many containers had to be kicked over the side and the value of the contents of that container. So I always say to you that, yes, you can self-insure. There's no problem in self-insurance, and take a gamble. It's a gamble. And just replace the order if it's damaged or kicked over the side. But be very, very aware that if you're doing self-insurance, be very aware of general average. Now, when I worked as a consultant for very, very large, an internationally known organization, put it that way, and one of their units would be buying and shipping trucks on a daily basis from Japan to everywhere in the world. And they were paying a fortune in insurance premiums. So they start playing the numbers game. And they said, we'll self-insure. We do lose a couple of trucks every year, damaged trucks. It's easier to just buy another one than to pay this massive premium under a marine insurance policy. Yeah, okay. But I did advise them, at least cover yourself with general average. Make sure that you have a policy that covers you for general average. It's cheap and cheerful. Okay. So that's about it, folks. What I've done is I've used the Zim line tragedy. Thank goodness nobody lost their lives, just cargo. I use that as an example of what kind of insurance there is. So you can see the photographs of the containers in the water. You can see the photographs of the containers on fire, very dramatic photographs. And it begs the question, were all those containers insured? And what kind of insurance do they have? And was it rubbish insurance? Will they get their money back? And then I introduce you to Clause A, Clause B, Clause C. Clause A, yes, they get the money back without any questions, more or less. Clause C, not really. Clause C covers you for jettison, but not washing overboard. And Clause B would cover you. Okay, so I hope that kind of gave you some food for thought. Next time you're insuring your cargo, please make sure you know what you're paying for. And also, if you are buying goods under CIP, Incoterms 2020 says the seller is obliged to insure under Institute Cargo Clause A, all risks. So you're okay. But under CIF, Incoterms says the seller is obliged to insure only under Institute Cargo Clause C. So when you're buying on CIF and Cargo Clause C is okay for you, you're all right. But if it isn't, you must say, please quote me CIF, subject to Incoterms 2020, Marine Insurance Clause A. So you're saying, I don't want your CIF Clause C, I wanted A. Okay, that's it. That's it. Short and sweet, this one. I've got two more coming up soon, and the request ones. I'm just putting those together for you. And as usual, here comes the commercial. Marine insurance is covered in great detail, in minute detail, in our import-export online course. And for those of you who have been watching me before, you know we offer you 3 courses: a letter of credit course, a import-export course, and an agency course. Should I become an agent? What kind of an agent shall I come? I would like to remind you that all our courses are backed up with free help. Free help. So if you're studying and you come across a section that you just can't get your head around, you just give me a buzz and we can talk through it. And when you do, that's what you're paying for. You're paying for a course and one-to-one help. Okay, so I'm going to say goodbye to you. Keep safe. And I'll see you next time around when I'm doing a request video. Okay, from me, take care. Bye-bye.